Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning guys. So it's all getting real. Close to Friday, it's strong from our times. It's getting hot in here, right?
Yeah.
That's what I'm thinking of because it's with Trump.
Yeah.
It's finally beginning to get real from these tariff headlines.
Absolutely. And I think he's demonstrated that he is at least doing some of what he said he will do.
It's not all bark.
Yeah.
It is some bite.
It is some bite. Maybe more bite is coming, unfortunately. So let's just take it from the top, right? And I think the news flow is coming in thick and fast. And now, of course, we're getting to the point where it is not about what they will do, what I will do in the future. It is about what I'm doing now. And I think in that sense, the 25% tariffs, if you're just sort of tuning in to news and have not been on social media, etc., I mean, this is the big story. President Trump announces a 25% tariff on all cars which are not made in the US, all imported passenger vehicles, and key auto parts as well. I mean, there is a list of everything which is included. And by the way, the order which he has signed also gives him the powers to expand the scope of these tariffs to include more things, more components and such. So, I mean, engines, transmissions, powertrain parts, electrical components are some of the auto parts which are included. But as I said, they could be expanded. The scope could be expanded in that sense. These tariffs, the 25% tariffs, go into effect on the 2nd of April. And I think in the press conference, President Trump was asked whether these tariffs will stay for the full 4-year term, and the answer was yes. So, I think that's by the way, 50% of everything which the US consumers buy in terms of passenger vehicles is made outside of the US. So this is going to be this is going to impact, and we'll get to stocks and specific implications for companies here in India as we go along, because there are implications here as well. Now, equities, as far as broader indices are concerned, took a dive. S&P was down about 1.25%. The Nasdaq was down about 2%. In terms of the big macro markets, the 10-year yield was up 3 basis points, small, but they're creeping higher. The dollar index now, I think 6 days now, it's broadly been up 104.55 as we get closer to the 2nd of April deadline, and as tariffs go higher. Brent oil prices, again, about $74, about 1% higher. You had, in terms of data, US durable goods numbers, which were solid. CNBC, and we'll sort of, go across to our colleague who reported this story, this was source-based, but they reported that non-tariff trade barriers would not be included in calculating reciprocal tariffs. This, at the margin, is good news. This essentially are, VAT, things like, their assessment of how much a country is undervaluing their currency, etc., etc. So these are non-tariff barriers. So if the tariff reciprocity is X, these things would have been X plus something. And they're saying, well, it perhaps will not be included when countries are handed over a number. The same story goes on to say, although I think this is also important, I'm quoting from the story, decision will be made on a case-by-case basis. But I think, if they include VAT, especially for regions like Europe, etc., it's very, very negative. So we'll see. The Financial Times reported that EU officials are expecting a 20% tariff imposed. And we'll see. I mean, here in India, generally the broader sort of consensus number is around 10% additional imposition on Indian goods going into the US. By the way, you had a Fed officials weighing in on the entire transitory 2.0 narrative. What is this narrative? It is basically, after the FOMC meeting, the comment which was used by Jerome Powell that, some of these things, inflation caused by tariffs, are transitory. We will look through them. And that kind of cemented the view that maybe the Fed will cut irrespective of tariff hikes, etc. But there was some pushback, so some dissent as well. We'll need to watch closely because this will affect Fed pricing for the year. Tariff noise will continue into the 2nd of April deadline. Huge range of possible scenarios. I think we've been highlighting that day after day. And which brings us to the markets here. I would say this. I mean, I think it's a good thing that the markets are selling off a little bit going into the 2nd of April, the tariff, reciprocal tariffs day. Otherwise, I mean, if you kind of sort of slept through and sleepwalked right into 2nd of April, you would have completely underpriced that risk that tariffs perhaps will go up and maybe it'll be even more negative than what the consensus is expecting. So here in India, around the region, in the US, there is a little bit of a risk off which has happened, which I think is not necessarily a bad thing. We've been flagging this off for a while. So markets sold off sharply, and I think the sell-off accelerated in the last 60 minutes. I'll just put out the levels. You got to look at supports. I mean, on the upside, you basically take out the recent high for the Nifty, the Bank Nifty. That's immediate resistance, and then we can look at higher levels. But support's more important. They come in at 23,396. That's the nearest support, 40 hourly exponential moving average, and then 23,288. These are two numbers on the Nifty Bank. We got a second straight lower close. And yesterday morning, I was asking if the Nifty Bank has completed something, because yesterday we ended, day before yesterday we ended lower. Yesterday we ended lower. So we also, by the way, broke below the 20-hourly average. Here, the support is the 40-hourly exponential average, which is 50,856. And then the next one is 50,641. So that's a broad setup. And, of course, the levels to watch out for. Lots of focus on auto components, etc. GIFT Nifty indicating about an 8.5% lower start. Surabhi.
Auto, and all auto is down across Asia this morning as well. And those markets are feeling the heat already. But by the way, I mean, just beyond auto, it was also tech that was down big time in the US. Wall Street was lower. Nvidia yesterday fell 6%. And there's a lot of chatter between, the whole AI and, models that are coming out of China versus the US. There were brokers talking about how some of the US models are better. But the fact is it was risk off. And therefore, even tech was falling big time yesterday in the US. Now, by the way, how are the auto reactions playing out in terms of prices? US automaker stocks all are down in after hours trading. So if you're looking at Stellantis, if you're looking at GM, Ford, these stocks are down between 4 to 6%. Asian automakers this morning, and particularly the ones in Korea and in Japan, now whether it's Mitsubishi, Mazda, Nissan, Honda, Kia Motors in South Korea, all of these stocks are down between 2% and as much as 6%. Mitsubishi is right now down 6%. So clearly now this reality is beginning to get priced in. By the way, so what is the weighted average tariff right now? And this is just one part of it. This is just the auto leg. We get the full picture, as they say, perhaps on the 2nd of April. So the weighted average tariffs have moved from 2.5% at the end of December to about 8% right now in the US. Barclays put out a note yesterday saying that they feel that by the time all this is finally and fully through, weighted average tariff for the US is going to be 15% plus. So that was one estimate that was there in the market yesterday. Markets across Asia, let's get the indices themselves up for you. Well, like I said, most of them are down. Japan is down about 1%. Korea is down 1%. The Hang Seng is kind of bucking the trend for the time being, but that's the outlier market. Otherwise, the region is under pressure. There's no denying that. Speaking of the Hang Seng, a quick data point from China. Industrial profits came down 0.3%. This is in the Jan-Feb period, clubbed together because of the Lunar New Year holiday. It's not new. This number, industrial profits out of China, has been weak for several years, for several months, and that weakness has persisted in the latest print as well. By the way, the dollar, of course, in general was slightly higher. It's continuing to march above 104 because of course, all the tariff sort of uncertainty, plus the fact that the durable goods number in the US was slightly better than estimated, was not as weak. And let's watch for that. The yen continues to be under pressure in Asia as the dollar is broadly higher. Now, the Nifty broke the 7-day winning streak yesterday. It was a very wide sell-off across market capitalization, across sectors, which is a fact. But the fund flow picture is still good, and the corporate news flow picture is still good. I want to highlight on the positives as well. Let's talk about the fund flows. 2,200 crores of buying once again looked very, very good. Yesterday, for a change, DIs weren't on the sell side. They were also buyers. So the total flows picture was quite solid yesterday. The corporate news flow. So yes, all the global tariff headlines are very negative. We know that. But the local corporate news flow is good. Just an example of what I'm talking about. Order flows are coming in. Deal wins are coming in. Wipro has backed a large deal. 500 million pounds is what they're talking about. It's from a UK-based company. We'll talk about that. NBCC. Remember yesterday, a couple of these order win stocks were doing very, very well. Today, it might be NBCC. They've announced an order win which is worth 25,000 crores over a 3-year period. It's with the Maharashtra entity. So watch out for this stock. Defense stocks, more headlines. Bharat Forge, 6,900 crores of contracts for, and also Tata Advanced Systems, of course, it's together, for artillery guns, for mobility vehicles. So defense stocks continue to be in focus. And if you need a cherry on the cake in terms of good corporate news flow, then there is BSE. I mean, they're going to be issuing bonus shares very, very soon. So I guess, Nigel, yes, the global headlines are wobbly, markets are a little uncertain, but local corporate news flow, order wins, all look strong.
Well, and it's the expiry day as well.
Yes.
And after a while, the bulls will feel, well, we are back in the game, because we had 5 straight series where you saw that the bears dominated. And this series, the bulls, they have made a comeback. So for this series itself, getting into expiry day, the bulls will be feeling good because the index is up close to around 4% or thereabouts. Those are all the losing series that we had. In fact, in the October series, we were down more than 5% or thereabouts. So we're making a comeback after a while. The bulls will be feeling good. If you look at the Troika, the dollar index, Brent crude prices, and the 10-year yield, well, all of them have perked up a little bit from the recent lows. But the good news for us is the FI flows have returned. In 5 sessions, you get 20,000 crores. What more can you ask for? Month to date, still they're sellers to the tune of close to around 4,500 crores odd. But the FIs are showing us the money. And that's going to be very, very good news, because that was, a big negative in the last many, many months. Moving to the rollover picture, the Nifty rollovers, more or less in line with what we have seen. The Bank Nifty rollovers, that's much higher than what we have seen. So getting into the expiry day, Nifty bank rollovers, a lot of it did take place in the last couple of trading sessions itself. And that was close to around 69%. To give you a reference number, it was sub 60% in the previous series as well. Moving to the FIs, what do? They lighten some positions. They covered some shorts. They unwound some longs as well, though they continue to remain net short with close to around 66% of their positions on the short side. Getting to the levels then, just punch in those levels, because we're looking at the options data, and that's how things are stacked up. So there was writing being seen at around the 23,500 call, 23,600 call as well. But on the downside, the 23,400 put was fairly active. And the premium out there is close to around 40 rupees. On the upside, the 23,600 call had close to around 50 rupees. So punching in these data points, you'll get the broad levels that you're looking at. We ended closer to around the 100 DMA. That's the broad range you're looking at for expiry day itself. Going by the options data and going by the reference levels, these are the important levels. You're expecting expiry to be in this range. If the Nifty needs to fight back today, I think the Nifty bank needs to play a role. The rollovers are relatively higher, and these are the crucial support zones. The 200 DMA and the 100 DMA, these become the important reference zones on the downside. And given that tech has got into a bit of a tizzy yet again, the Nifty bank will have to do bulk of the heavy lifting. What are the stocks I'm looking at in today's trading session? Trent. That stock was relatively stronger in yesterday's trading session. It was showing good strength, even when the markets did fall apart. And in yesterday's trade, it crossed the 20 DMA. Now all eyes on whether or not it can get closer to around the 50 DMA. In the near term, the sense you get is after the sharp correction we've seen on Trent, maybe it could do a relative outperformance. So that's one. And the other 2 stocks I'm looking at is Zomato as well as Jio Financial. There's that Nifty semi-annual rejig that will take place. So keep an eye out on these stocks, particularly towards the end of trade. That's the rough inflow that we could see. So keep an eye out on these names.
Okay, all right. So plenty to track. And apart from the global headlines, a lot of internal cues, which are actually not that bad. Let's start up with the equity call of the morning then. Rhythm Desai of Morgan Stanley expects growth data to improve, the RBI to get more dovish, and an earnings beat in the upcoming earnings season. According to him, the most crucial cues would be global, including US policy and growth rates. A global recession or near recession would be challenging their bullish call and keep equities off the highs in 2025.